Alright, we're looking at self-study problem 6-8, where we have this company that has a taxation year end of December 31st. For the year end December 31st, 2020, they had accounting statements of net income of $278,000 prepared using GAAP, and the accountant has provided the following information to be used in preparation of the net income figure. First step is we have a total of $123,000 deducted as income tax expense, and this amount included $16,000 of future taxes. And neither current or future are deducted in the calculation of net income for tax purposes, so we need to add back the $123,000. Next, we have a company was late in making its required tax installments and they paid interest of $400. That is an undeductible expense for taxes, so we'll add that back to income as well. Next, we have the year on December 31st, 2020, the company recorded $83,000 amortization. However, maximum available CCA is $97,000. So we'll add back the amortization and we'll subtract the CCA of $97,000. The next item is we have the company's accounting expenses included a payment of dues in a local golf club of $2,500, and the cost of entertaining clients at this club during the year was $9,600. Golf club dues are not tax deductible, and only half of the entertainment expense is deductible, so we need to add half back. And $4,800. Fifth step is no allowance for bad debts was established at either the beginning or the end of 2020, and the $5,200 in bad debt expense that was included in the accounting records reflected only the amounts that were written off during the year. For tax purposes, the company deducted a reserve of $3,400 for the taxation year ending 2019, and they think the new reserve should be $4,200. So in this case, we need to add back the $3,400 prior year reserve and subtract the $4,200 reserve for the current year. Step 6, the accounting expenses included $1,500 for premiums on the life insurance policy on the president, and the company is a beneficiary of the policy. One of the company's major creditors requires that this policy be enforced during periods in which there are loan balances outstanding. There's no change because life insurance, No change as life insurance policy was required to obtain financing, therefore no deduction, or no change to income tax, or income for tax purposes. Step 7, the 2020 accounting expenses included $37,000 in bonuses that were declared in favor of company execs, and only $12,000 of them were paid in 2020, with the balance being paid in February of 2021. No change because they were declared and fully deductible, and they're going to be paid within 180 days of year end. Eighth step says the bond interest expenses included in the accounting records includes $3,200 of discount amortization. And in this case, discount amortization is not deductible for tax purposes, so we need to add the $3,200 back. And lastly, on December 31st, 2020, the company paid landscaping costs of $27,000. These costs were treated as capital expenditures for accounting purposes, as the expenditures made at the end of the tax year, no amortization was recorded in the 2020 financial statements. In this situation, landscaping costs are given the appropriate capitalization treatment for accounting purposes. Under Income Tax Act Section 20, it allows such costs to be deducted in the year in which they're paid. Therefore, this deduction is available for tax purposes. Therefore, adding and subtracting the various moving components, the net income for tax purposes will be $370,100.